We've got that rand trading around 676, 677 this morning. It's almost a 10-cent swing from where it was trading yesterday morning. Quite a bit of weakness filtering through for the rand.
Yes, good morning, Steve. And well, once again, it's really the rand has been taking its cue from offshore developments, and we saw those equity markets in the US experience further selling pressure. We saw the dollar enjoy a little bit of short covering, and as a result, the rand weakened. And in fact, it weakened across the board, which just reminds us of how volatile this rand can actually be. We had a very strong run last week, and it looks as though some of those rand bulls locked in profits the minute they saw signs that risk aversion was creeping back into those global markets.
Well, we had golden Forex numbers out just a short while ago, and it looks like the Reserve Bank hasn't been active at all in the markets over the month of May. Of course, we did have a little bit of rand weakness during the month, but reserves appear to be weaker all round, net and gross reserves.
Yeah, I mean, if based on our analysis, we think that they basically bought around 200 million worth of dollars last month, which is down on what we've seen in previous months. Especially the January figure, where they were quite active, and it seems like there's been this gradual trend of slowing up in terms of reserve accumulation, and of course, it's very difficult for this Reserve Bank to go up against a wall of money that's come back into the country. We've seen portfolio flows into the bonds coming back over the past fortnight or so, and it's difficult for the Reserve Bank to justify spending money to go and build reserves when the rand is strengthening for other reasons. There's obviously an opportunity cost associated with building reserves when you've got such a wide interest rate differential between South Africa and its other currencies, or its the hard currencies. So that's something that they've got to weigh up, and they've decided to just take their foot off the accelerator. They're still accumulating reserves, but just at a slower rate.
At the same time, though, we had Trade and Industry Minister Rob Davies yesterday saying that the rand was overvalued. Very difficult to know what they're going to do about it, but he said that discussion was ongoing within the cabinet. This is slightly contrary to what we heard from the Finance Minister recently, who said the strong rand had been shielding us from inflation. Didn't appear too perturbed by it. Do you think there is anything the government can do? Because nothing's worked so far.
Stephen, to be honest, the short answer is no. I don't think they can do a lot. I think, with anything, they're going to try and open up the market progressively through the forthcoming years. We've seen it with exchange controls. There's been gradual relaxation. I don't think that they're going to come through with any kind of tax measures that we've seen in countries like Brazil, or holding periods. I think they're going to open markets up and let the market find its own fair value as much as possible. So it's difficult to manipulate the exchange rate. I don't think they want to be seen to be doing that. And I think, when it comes to the reserves, the same kind of picture is being told, that the authorities are going to accumulate reserves. They're not targeting any specific level. They just want to build up reserves so that the country has got some kind of a buffer during times of risk aversion. Reserves at high levels often help currencies and economies during those periods.
Well, a couple of events on the horizon today. Starting with the local event, we have the Bureau for Economic Research's Business Confidence Index. That's for the second quarter. What would you be expecting from that, and is this potentially rand moving?
Yeah, I don't think it's going to have much influence on the currency, but we saw that nice rebound in the first quarter, most of it on the back of the manufacturing sector, and we know subsequently we've seen those GDP figures coming out with some strong impetus coming through from the manufacturing sector. We're doubtful that is going to be maintained in the second quarter of this year. So by intuition, we believe that there is a risk that the number disappoints on or is lower than the Q1 reading. But nonetheless, I don't think it's going to have a material influence on our currency markets at this stage of the game.
Well, how about Ben Bernanke, the Fed chairman, speaking this evening? That could potentially be moving for the dollar, couldn't it?
I think so. I think that's more of the big thing to watch this afternoon or this evening. We are still taking a lot of direction from what global investors are thinking about risk appetite, what they're thinking about the dollar and the euro's prognosis, and any new light that the Fed chairman can cast on the interest rate, the growth outlook in the States could have a significant bearing on the euro-dollar exchange rate, which in turn could have implications for the commodity prices and the dollar-rand exchange rate.